Now for our monthly Grant Thornton deal tracker. Here's a quick snapshot of the picture so far. Value of total M&A action so far has gone up 9%, which is moderate compared to last year. But volumes have seen a sharp spike. To talk more about this, we are now joined by Prashant, Mehra, partner at Grant Thornton. Prashant, good to have you back on this show. Let me begin by asking you, the private equity investment seems to be leading M&A deal flow as a whole. Tell me, in this particular quarter, what are the sectors that stood out, and are there any differences in terms of the inbound and outbound private equity deal flow in specific? And I'll ask you about the domestic deal flow in a bit.
Yeah. Hi, Kritika. Yes, I mean, the year to date is throwing out very interesting trends. As you rightly mentioned, there's been an overall growth of about 9%, but most of the growth has actually come from private equity, which has contributed about $12.8 billion across 750 transactions, thereby about a 50% increase in both deal value and volume. The other bit of growth has actually come from inbound investments, where again the deal values have gone up by 40% as compared to last year. In terms of sector trends, as far as the M&A is concerned, energy and natural resources has contributed 32%, followed by pharma, healthcare and ITES, which have together contributed about 30% each, taking the full tally between these three sectors to about 64% or so. On the private equity side, I mean, as we've been seeing since the last few quarters, ITES has clearly dominated the pack in the year to date as well, contributing more than 40% in deal values.
Right, but in terms of the overall M&A deal value, it's decreased by about 5 to 6%, if I'm correct. Is that a trend that could continue in the next couple of quarters?
Well, I mean, there are certain interesting trends which are actually coming out in the year-to-date numbers. If we do the maths, the average deal value for domestic M&A has actually come down from $50 to $30 million. However, for the average deal value for inbound investments has gone up from $70 to $130 million. This obviously shows that the Make in India initiative is working. Overall economic indicators look positive, and there is a resilient foreign investor confidence which is there in the key sectors. The domestic M&A values coming down is probably a clear indicator that the corporate balance sheets are still stretched for cash, and in the absence of any alternate means of financing, the focus is clearly on organic growth. But going forward a couple of quarters, as we see more on ground action by the government, especially in terms of key reforms such as the GST, the New Companies Act, ITP for tech startups, moving forward the stalled projects, I think, and pick up in alternate means of financing for domestic and capital markets also showing the growth, I'm sure the domestic M&A activity will also pick up, and this 9% number will probably be around the 20-25% number, which is more comfortable.
Prashant, you made an important point about how the inbound M&A increase to $130 million is quite substantial and could mean that government's Make in India drive is working. Can you break this up as to, from year to date, what are the sectors where we've actually seen significant inbound investment? And given the conversations that are relevant right now, what are the sectors that will stand out in the next coming quarters?
Kritika, it's interesting to see that the inbound investment which is coming is actually coming in the green sectors, the horizon and evergreen sectors such as energy and natural resources, pharma, healthcare, ITES. I mean, all these things have to do with infrastructure, so all that is good. This is both a flavor coming out in the private equity as well as the inbound investment sectors, and I think this trend will probably continue. This all falls down to the fact that there is a strong confidence of both the foreign investors and the financial community in the country, so they are actually investing in sectors which are key to the country.
And any sectors that stand out for you quickly, running out of time?
Energy and natural resources, clearly.
All right, Prashant, thank you so much for joining in with that. But with that